Yeah.
topical issues that.
Well, welcome to the Choose Your Own Finance podcast, podcast by two expats for expats. I'm Blair,
And I'm Tuan.
and today we're going to be talking about what's in the news. So, Tuan, what have you seen in the news?
Well, it's been a while since we've last spoke, so welcome back everyone, and I hope you had a lovely break. Well, in the news, a few issues that's caught my eye, and previously we discussed about Evergrand and Country Garden real estate issues in China.
In China, I remember that, yes.
So I thought we'll do a little bit of follow-up because there has been some major development recently, and I guess let's find out what's happened in the news.
Okay.
And the first article which I thought we'll look at is from Reuters, and its headline is China Evergrand ordered to liquidate in landmark moment for crisis hit sector.
So, this is that moment we were thinking would come because Evergrand a few months ago looked like it was in a lot of trouble and there was a lot of worry around.
Yeah.
And Evergrand, just to recall, Evergrand is one of the largest property developers in China. Right?
That's right. So it was the biggest at one time, and it was the second largest Chinese developers when it spectacularly collapsed.
Yeah.
So it's a big news hitting the Chinese population and the region as a whole too, because real estate is such a big issue and big way of life for China and the Chinese government.
So they've been ordered to liquidate. How did that happen?
Well, I guess over a long period of time, for those who aren't familiar with issues, they borrowed a lot of money to develop housing in order to sell and make a profit. So for several decades, they were doing really well, making lots of money. And unfortunately, they kept borrowing more and more money. And as interest rate went up and things went not in their favours, they started owing more and more money to their creditors. And which resulted in them forcing them to borrow more and more money.
So this is the problem with being over leveraged, right?
That's right. And as we discussed previously, the Chinese government had what's known as a 3 red line, where they forced developers to minimize the leverage. So they had to keep a certain amount of cash, operating cash on hand. They were allowed to borrow over this certain percentage of the assets and had to do certain things that they were doing previously, and
Right.
that resulted in them having like I guess a crisis because they could no longer borrow money and they were short of cash to satisfy their short-term liquidity needs.
And one of the issues with this is not that those regulations are bad, but that they were put in place a bit too late, when the companies were already in a lot of trouble, already had a lot of leverage.
That is exactly right too. All the Chinese real estate firms operate on a very similar protocol, where borrowing a huge amount of money, highly leveraged, and as a result of the reform enacted by the Chinese government, it caused many of them to go into trouble, and quite a few have gone bankrupt, including, as we talk about, Evergrand today, and also Country Garden, the biggest developer as well.
So Country Garden was bigger.
They're bigger, and they're also in big trouble, and they could be forced to liquidate as well. But I guess that's a story for another time.
So tell me about this liquidation process. Like, why are they liquidating now? You mentioned the Hong Kong courts.
Yes, so they were ordered to liquidate by a Hong Kong judge, and she ordered them into liquidation based on a petition from a US creditors. So these US creditors had a lot of US dollar denominated bonds that Evergrand was selling to fund their growth. And for a while there, I guess Evergrand was fighting the orders and mentioned that they were wanting to try and operate out of the situation. And as we reported last time, they filed for Chapter 11 bankruptcy protection in the US, which allowed them protection from creditors, but still allowed them to operate in hopes of making enough money to trade their way out of the problem.
Yeah.
But unfortunately, the sector hasn't done as well as they hoped. Things have stayed the same, if not worse. And the judge could see that they weren't making any inroads, and they did not have a clear plan how to trade their way out of the problems. So the judge, I guess, upheld the petition by the bondholders to liquidate Evergrand.
So liquidation means that they have to sell off their assets
That's
to
exactly
repay their
right.
debts.
That's exactly right. So liquidation means they will be forced to fire sale everything they can, and pay back the creditors in order of hierarchy, money owing. But it's not looking good for everyone involved too, because I guess the money owing by Evergrand has grown well over $340 billion, I believe, and the estimate of their assets is only about 240 billion.
That's a 100 billion gap.
That's a 100 billion gap, and it could be a lot bigger given that they have to fire sale everything as well. So
what happens when they owe money they can't pay back?
unfortunately, I guess a lot of people are going to be missing out on their money. Now, if you're an equity holder of Evergrande, it looks like you're quite likely to lose everything.
Right, because the market value of the company is essentially zero now. It's negative at this point.
That's exactly
Essentially.
right too. That's right, and that is the risk you take as an equity shareholders. You're on the lowest rank in terms of repayment of any money owing as such. So.
What other types of debts would Evergrande have?
Yeah, so a lot of other debts that have, as mentioned, various bondholders, US dollar bonds, Chinese or local bonds. They also have to pay all their contractors and employees as well, and then maybe other miscellaneous things.
So typically, who gets paid first out of that list? So you've got your employees, you've got your contractors who might have already provided services that haven't been paid for. You've got your bondholders. How does that?
Yes, so the one people that always guarantee to get paid first are the liquidators who have been appointed. So they will always get the money first to work on these things. Everyone else, I guess, has to fight quite a bit to jockey for positions. And I guess try to work out legally where they are.
1 billion, there's no assets to pay it back. That's a lot of people losing out.
100 billion is a lot of money. So I guess the court will decide depending on the contract as well. So if they are secured creditors, they may be able to get 100% of the money back. If you're unsecured creditors, you might only get 10 cents, 20 cents, 30 cents. They don't really know.
So describe to me the difference between a secured creditor and an unsecured creditor.
Yes, so a secured creditor and unsecured, I guess from a legal perspective, your priority on the ladder when things go bad.
Right.
So if you're secured creditors, you're loaning money secured, I guess you have a lien on
a property or an asset.
Or asset by the company. So if it gets sold, you'll be first in line to get the money back.
So this would be like if the bank had given them a mortgage to buy a house or some land or something like that.
That's exactly right too.
So they'll get their money first.
They'll get the money first. And if you're unsecured creditors,
which would be a bondholder, right?
Bondholders, but it will be dependent on what type of bonds they were selling and what type as well, because there's multiple levels. So if they were selling some of the higher bonds, which is secured or partly semi-secured, they will be on higher rank on the ladder to get their money back first.
So it depends on the type of bond you have.
Type on the bonds and where they rank on, and I guess they'll have to fight in courts, and no doubt people will be fighting in courts very hard
there's a lot of money
to see, because there's so much money involved too.
Yeah.
And I guess hopefully what they do hope to get is that the employees and the contractors, hopefully they'll get most of their money back too.
Yeah.
Because they are technically high on the bond scale, but again it'll be up to the judges and to determine how much they get back. They may not get back 100%. They may get back only 80 or 90%.
And this is even like salaries that haven't been paid.
That's exactly right. Yeah. So
Yeah.
salary and other entitlements owned by the employees.
Yeah.
And contractors who provided all the services.
And that seems fair to me, I have to say. It seems fair to me that, that if you're an employee or if you're providing a service, you should be paid for the work you've done.
Definitely too, I guess, pies.
So this is so interesting because, you know, we went through the 2008 housing crisis in the US, that then rippled throughout the world. How much of a ripple effect do you think this Evergrand and housing crisis in China will have? Will it be similar to 2008, which turned into a much bigger world issue rather than just a mortgage crisis in the US?
Yeah, and I guess that was a big fear by a lot of people about becoming a global contagion.
Yeah.
And a repeat of the GFC. There are good news and bad news. The good news is that it's extremely unlikely to affect globally in the global market too, because the Chinese real estate market is very localized, mainly due to the fact that the Chinese law really did not allow people to buy real estate if you're not citizens of the country.
Right.
So property was mainly due to local citizens as such. So as a result, they are the one that can be most affected.
The
local population,
people who are working with Evergrande, contractors, people who own property, people who own property that may be unrelated, but now the property market is all wishy-washy, right?
So everyone's, there's quite a bit of panic, I guess, in the entire Chinese real estate market.
And I imagine it would have repercussions across the entire Chinese economy because it's such a big sector and it affects construction, it affects, like we said, all these contractors that were involved and all the people that own property or people that need to buy property or might have been thinking about buying property. It would have a lot of knock-on effects within China.
Definitely, and this is the fear and speculation by a lot of people because everyone knows that the property is the biggest growth component of the Chinese economy. And they understood that the government, Chinese government, will have to take actions, and they weren't sure what type of actions they were going to take.
That's a big variable because the Chinese government is a very powerful force here.
And they were the one, unfortunately, started the domino effect. So people initially speculated, would the Chinese government take the hit and bail it out, or will the Chinese government force everyone to take a hit, but then pass certain rules to protect themselves? For example, US and external bondholders may not get any of their money back at all, and the government might pass a law saying, okay, we don't care if you're high or secured on the bond ladder, we're going to make it that you get nothing and only the local people gets paid first.
It could happen.
It could happen, and that was definitely a big fear by external bondholders.
Yeah, interesting. So for you and I in our portfolios, this isn't going to have any effect because we don't own corporate bonds, right?
Yeah, so luckily for us, we're not affected directly because I only own government bonds, rated highly rated government bonds.
So if you have your standard VWRA, IGLA portfolio, this will have no direct effect.
And no direct effect, which is the good news.
Yeah.
And even if it did have a slightly direct effect, we will be suffering not much of an issue. Mainly the fact that those bond funds, like IGLA, they're quite diversified across several governments and across many bond funds.
Yeah.
And even though one bond fund may go bankrupt and liquidate, the others hopefully will be able to survive. And
so it's a good illustration of how government bonds are safer than corporate bonds, and also how having a bond fund is much safer than owning a single bond.
Definitely. So that's two of the most important principles that we try to preach and tell people when you're saving and investing for your retirement and long term. go for the high grade investment government bond and always diversify as much as possible, because you never know what sector or what will happen in the future. Things can and will go wrong, and if they do, you're not crippled by that, and you can recover.
Yeah.
No problem.
It's also another great illustration of how home country bias can really be problematic. Imagine if you're a Chinese investor and you have your world ETF for equities and you might have a global bond index, but then you also decided to invest locally in the Chinese bond market or stock market. Perhaps you invested in Evergrand or Country Garden, one of these. Perhaps you owned property in China. Like if you have equities and bonds in the Chinese market right now, you're suffering. If you own property in the Chinese market right now, you're suffering. If you gain income from employment in China right now, there's a lot of risk for you. So when you build up a home country bias, you overemphasize your risk in that market, right?
Yeah, that's exactly right. You've increased your risk by having such a strong home bias, but you've not necessarily increased your return.
Right.
So, which is a danger that we tell people to avoid if you can. Home country bias is an incredibly strong bias that most investors around the world suffer from.
Yeah.
And it's natural because most people believe that they know their local market more, they're comfortable with it, so they're happy to invest there. But as we can see by this example and many other examples in the past, when things go wrong and some countries unfortunately go through very bad economic for long periods of time, you can suffer greatly.
Yeah.
So by diversifying globally, you really buffer yourself from these kind of situations while keeping your return the same or even higher.
Yeah. Well, diversification's the only free lunch in investing, right?
It is. So it's free, and now that it's so cheap to do, why not do it is our motto.
Yeah, absolutely. And this is also a very good example of how you don't need a complicated portfolio. 2 funds is enough to grow your money for the long term.
Yep, 1 global stock and 1 global bond ETF is all you need.
Yeah.
And you can sleep well at night with never fearing about your portfolio suddenly go to zero. Well, I hope that's a lessons that our investors can learn from. It's always better to learn from someone else's mistake than from your own.
Yes, absolutely. Well, thanks, Tuan. And
we'll look at another topic.
All right.